Hello, financial fans. I've been doing some trading this week. This is Friday, and yesterday, 8/19, August 19th, I bought NLY, which is a high dividend stock. Bought it for $8.40, and as of right now, NLY is, from yesterday, it's up 1.33, 1 1/3%. But that's only one day. We have no idea what will happen in the future. But I sold. I sold two stocks today. I sold CVS, which performed quite well, and I sold it for $84.39. And I sold PFE, which is Pfizer, for $49 and a nickel. And now we'll take a look at some stocks that you might want to consider in case you're putting a portfolio of your own together, or if you just want to follow the market and play along on paper. We are going to begin the stocks to consider with Qualcomm. And the symbol for Qualcomm, QCOM, it closed at $142.09 per share on Friday, up 1%. So it was a nice move upward on Friday. And the column on the left, 2/3 of the way down, the 52-week range for Qualcomm, 108.30, $108.30 per share to $167.94 per share. The average volume, over 7 million shares trade every day. It's considered to be undervalued. It says so right down there at the bottom of the left-hand column. In the middle column, third item down, the PE ratio 17.75. I would like that to be lower, but that's still lower than most stocks in the market. We look at the yield, about 2/3 of the way down the middle column. Forward dividend and yield, slightly less than 2% is what you receive for holding on to the stock, so that's not very much. We look down there at the 1-year target estimate, 181.67. That would be a nice move upwards if that does happen. And there is no guarantee in the stock market that that will happen. Next stock is Micron Technology, symbol MU. And it closed at $70.23 on Friday. And we look down at the 52-week range, $42.89 to $96.96. So some people might have doubled their money in the last 52 weeks on this, or they might have lost 50% of their money. The average volume, a little over 20 million shares trade every day. It's considered to be undervalued. And we look at the third item down, middle column, PE ratio 19.38, so that's higher than what I like, but still it's definitely doable for a stock that's high-tech and well-known. And the dividend is probably almost not worth mentioning, 0.14%. But we look down at the 1-year target estimate, 115.59, so that would be an incredible move upward, and we would like that. Next stock we look at, Marathon Petroleum Corporation, MPC is the symbol. And the close on Friday, $54.77 per share. It was up exactly 1%. And we look down 52-week range, $26.56 to $64.84. So it has probably a pretty high beta there. The other beta is 2.16. It would trade about twice as much percentage-wise as the market as a whole. If the market's going up, that's good. If the market's going down, it's not so good. The stock, the average volume is 6,200,000 shares trading every day, and it's considered to be overvalued. The PE ratio, third item down, middle column, 4.64. That is fabulous. And we look down at the forward dividend and yield. That's very good. 4.24% is a good yield to receive on a stock while you're holding on to it. And the 1-year target estimate, That's also nice, $69.64. So that would definitely be good if that happens for the people who hold on to that stock. Last stock we'll look at today, EOG Resources. The symbol is EOG, and the 52-week range, $31.22 to $87.99. And the average volume, a little over 4.5 million shares trade every day, and it's considered to be undervalued. PE ratio 19.91, and the forward dividend and yield a little over 2.5%. That's respectable. And the 1-year target estimate, very, very nice, $99 and a nickel per share. So if that happens, that would be a good stock to have in your portfolio for this coming year. And I thank you very much for watching.